Hey everyone! Life insurance? Sounds serious, right? And like kinda morbid? But don't worry, I'm here to make it simple, not scary. We're all gonna die someday. This is just about being prepared for it. If you've ever wondered which life insurance plan is right for you, this video is for you. We'll break down the different types of life insurance in a way that's easy to understand, so you can make the best choice for your future. Let's dive in. Okay, let's start with the basics. Term life insurance is like the introductory level of life insurance. It's the most straightforward and usually the most affordable option. Think of it like renting an apartment. You pay for coverage for a specific period, say 10, 20, or 30 years. During that term, if, something happens to you, your beneficiaries, like your family, receive a payout. This payout can help cover things like mortgage payments, living expenses, education costs, basically anything your loved ones depend on your income for. But here's the thing. If you outlive the term, which, let's be honest, is the goal, there's no payout. You were covered for that specific time, and now that time has passed. It's like your lease ended. Now, this doesn't mean term life insurance is a bad deal. It's actually perfect for covering temporary needs, like a mortgage that will be paid off in 20 years, or until your kids are financially independent. Let's say you're 30 years old and get a 30-year term policy. You're covered until you're 60, likely a time when your financial obligations might be less. Makes sense, right? Term life insurance is all about providing that safety net during crucial years. The key takeaway? Term life insurance is straightforward, affordable, and perfect for specific timeframes. It's like renting that apartment. You're covered for the duration of the lease. Now, let's talk about whole life insurance, the kind of life insurance that sounds exactly like what it is. This type of policy is designed to provide coverage for your entire life, no matter how long that may be. Think of it like owning a home instead of renting. As long as you pay your premiums, the coverage stays in place. But here's where whole life insurance gets even more interesting. It also includes a savings component called cash value. A portion of each premium payment you make goes into this cash value account, and over time, this account starts to grow. It's like a savings account that's attached to your insurance policy. Now, the growth of this cash value is usually tax deferred, which is a fancy way of saying you don't have to pay taxes on the growth until you withdraw the money. And you can even borrow against this cash value if you need to, providing some financial flexibility. Of course, this lifetime coverage and cash value growth come at a price, literally. Whole life insurance premiums are typically higher than term life insurance premiums because you're paying for that lifelong coverage and the cash value component. So, who's whole life insurance good for? It's a good option if you want that peace of mind knowing you have lifelong coverage and you like the idea of building cash value over time. It's a more long-term approach to life insurance. All right, so we've talked about term life, which is like renting, and whole life, which is like owning. Now let's talk about universal life insurance, which is kind of like owning a home but with some added flexibility. See, universal life insurance gives you more control over your premiums and death benefit. That's the payout your beneficiaries receive, within certain limits, of course. Life is unpredictable, right? Your financial needs today might be different a few years down the line. With universal life insurance, you can adjust your premium payments if your financial situation changes. Having a baby, buying a house, unexpected expenses. You can usually adjust your premiums accordingly. You can also increase or decrease your death benefit if you need to, though this might require additional underwriting. And like whole life insurance, universal life insurance also builds cash value. The interest earned on this cash value can fluctuate based on market conditions, but there's usually a minimum interest rate guaranteed. Now, this flexibility is great, but it also means you have to be a bit more hands-on with managing your policy. You need to keep an eye on the interest rates, your cash value, and make adjustments as needed. So, universal life insurance is a good option if you value flexibility and want the potential to adjust your coverage as life throws you curveballs. It's like having a customizable life insurance plan. Okay, ready to add another layer to this life insurance cake? Let's talk about variable life insurance. Now, if you're someone who likes a little bit of, shall we say, excitement in your financial life, this one might be for you. See, variable life insurance is similar to whole life insurance in that it provides lifelong coverage and builds cash value. But here's the twist. With variable life, you get to invest your cash value in a range of investment options. Think stocks, bonds, mutual funds, the whole shebang. And just like with any investment, there's potential for higher returns. Of course, with higher potential returns comes higher potential risk. The value of your cash value isn't guaranteed and can fluctuate based on the performance of your investments. So, variable life insurance is more like a long-term investment strategy combined with life insurance. It's for those who are comfortable with a bit of risk and want the potential to grow their cash value more aggressively. It's like putting your money to work while also having that life insurance safety net. However, it's important to remember that with variable life insurance, you're taking on more investment risk compared to other types of life insurance. It's crucial to carefully consider your risk tolerance and consult with a financial advisor before jumping into variable life. Let's switch gears a bit and talk about endowment plans. Now, endowment plans are a bit different from the other types of life insurance we've discussed so far. They combine life insurance coverage with a savings element, but with a specific focus on savings. Think of it like this. With an endowment plan, you're essentially making regular premium payments for a set period. During this time, you're covered by life insurance. But the primary goal of an endowment plan is to create a lump sum payout at the end of the policy term, whether or not you're still, around to enjoy it. This lump sum payout can be used for anything you want: retirement, your children's education, a dream vacation, whatever your heart desires. It's like a forced savings plan with the added benefit of life insurance coverage. Now, because endowment plans prioritize the savings aspect, the life insurance coverage might be lower than what you'd get with a traditional life insurance policy. But the guaranteed payout at the end of the term makes it an attractive option for those who want to save for specific financial goals. So, endowment plans are a good choice if you're looking for a disciplined way to save and want a guaranteed payout at the end of the policy term. It's like a hybrid between a savings account and life insurance. All right, let's talk about money-back policies, because who doesn't like getting money back? This type of life insurance policy is designed to provide you with regular payouts at fixed intervals throughout the policy term. It's like getting a little bonus along the way. Here's how it works. You pay your premiums, and at specific intervals, say every 5 or 10 years, you receive a percentage of the sum assured, that's the total coverage amount, as a survival benefit. And if you live to the end of the policy term, you get the remaining sum assured, plus any bonuses. Now, because you're getting these regular payouts, the premiums for money-back policies tend to be higher than for term life insurance. But for some, the appeal of receiving money back during the policy term outweighs the higher premiums. Money-back policies are especially popular among individuals who want a life insurance policy that also provides some liquidity. Those regular payouts can be helpful for covering expenses, investing, or simply adding to your savings. So, if you're looking for a life insurance policy that gives you some cash flow along the way, a money-back policy could be a good option. It's like having your cake and eating it too, or at least getting a few bites before the big day. Finally, let's talk about group life insurance. Now, if you're employed full-time, chances are your company offers some form of group life insurance as part of your benefits package. It's like a little bonus from your employer to help protect you and your loved ones. Group life insurance policies are generally very affordable, and sometimes even free, because your employer shares the cost of the premiums with the insurance company. It's a win-win situation. However, there's a catch. There's always a catch, right? The coverage offered through group life insurance is often basic and might not be enough to fully cover your needs. Plus, if you leave your job, you usually lose the coverage. So, while group life insurance is a great perk, it's essential to consider it as a starting point and not your only source of life insurance. It's often a good idea to supplement your group life insurance with an individual policy to ensure you have enough coverage to meet your specific needs. Think of it like this. Group life insurance is like the first line of defense, providing some basic protection. But to create a truly comprehensive safety net for your loved ones, you might need to consider adding an individual policy to the mix. Okay, so we've covered a lot. We talked about term life insurance, which is like renting, whole life insurance, which is like owning, universal life insurance, which is like owning with flexibility, variable life insurance, which is like investing with insurance, endowment plans, which are like targeted savings, money-back policies, which give you payouts along the way, and group life insurance, which is like a bonus from your employer. Here's a quick summary to help you decide. If you want affordable, simple protection, go for term life insurance. If you want lifetime coverage plus savings, Whole life insurance is great. If you need flexibility with premiums, universal life insurance is a smart choice. If you like investment opportunities, consider variable life insurance. If you want a guaranteed payout, an endowment plan is reliable. If you prefer regular payouts, check out a money-back policy. If your employer offers coverage, use group life insurance, but consider additional coverage. The best plan is the one that fits your needs and future goals. So, take your time, compare options, and choose wisely. Still have questions? No worries. Talk to a financial advisor or visit our website for expert guidance. Life insurance is a big decision, but it's one of the best ways to protect your loved ones and secure your future. Don't wait. Start planning today.